President Trump just said that he has an earth-shattering announcement to make. Of course, this comes out right before our FOMC meeting. In today's video, we'll be going over the Bitcoin price action, looking at the most important levels that you need to pay attention to as it pertains to trading. We'll also be going over some very important news that could significantly impact the markets. If you enjoyed the content, make sure to smash that like button and subscribe. Without further ado, let's jump right into the video. So this came out yesterday. Trump. Earth-shattering announcement to come. Now, what does he mean by this? Let's hear some of the hints that he may have given us.
We'll have maybe before we're going to the Middle East, Saudi Arabia. We're going to UAE and Qatar, and that'll be, I guess, Monday night. Some of you are coming with us. I think before that we're going to have a very, very big announcement to make, like as big as it gets, and I won't tell you on what. But it's going to, and it's very positive. I tell you if it was negative or positive, I can't keep that up. It is really, really positive. And that announcement will be made either Thursday or Friday or Monday before we leave. But it'll be one of the most important announcements that have been made in many years about a certain subject, very important subject. So you'll all be here.
Not sure if we can really take his word for that, but he also came out and said that the US doesn't necessarily have to sign trade deals and that the announcements over the next few days don't necessarily have anything to do with trade deals. So keep your eyes on that. Now, taking a look at the Bitcoin chart. What do we see here? Because we got quite a nice pump. Now, these vertical white lines on the chart represent the past two FOMC meetings, and we can see the price action of Bitcoin right after those meetings. Overall, it's been down. I mean, the one in late January saw a little bit of a pump only to get corrected afterwards and then form that key breakdown region, which we are keeping our eyes on very closely at the moment. Then the previous FOMC meeting, we got a pretty big pump only to get rejected and then go ahead and move lower. So let's see what happens, because out of this 74.5K region, we did get a very nice pump. And as we've been covering on the channel, here are the key levels that you want to pay attention to if you're trading this market. This line, I'll just move it here because it represents the FOMC meeting today. Let me just move it over. And we can see that yesterday's candle was a pretty aggressive daily candle to the upside when we got the news that Trump and China were going to be discussing their trade deal. Now, we can also see that the key level that we held as support currently is the yearly open and right around 93.7K. I did mention that if we can hold this level as support, we would give this region another go to see if we can really hold above it and then target new all-time highs. So if you were in a short here, as I recommended, it would make a lot of sense to take profits right around the 93.7K area because it was a previous area of consolidation before we went ahead and bounced from there to target this region once again. As I said in yesterday's video though, if we were to lose this level and then lose 91.8K, I do think that we could see Bitcoin back into the mid 80K region. But right now we have to look at the charts and see what it's giving us. And that is currently holding that support level, especially right at the yearly open, which is right around 93.3K. We held it as support almost perfectly here on the daily time frame. Now, I have discussed my base case that I think that this big region over here is likely to pose a lot of resistance for Bitcoin. The reason being, once again, is because it was the previous breakdown point which we chopped around in before we went ahead and set our low for this year. So let's see what happens. The best case scenario for the bulls here is that we hold this level as support, and then I would be comfortable saying that it's highly likely that we go ahead and put in an all-time high. But until we can break above this level and then bounce back and hold it as support to move on higher, I would not be overly bullish. As soon as we hold this level, that is when it's time to celebrate because we will be moving much, much higher. Until then, especially with FOMC, make sure that you're managing your positions accordingly because we're about to get a lot of volatility. That reminds me, if you want to trade this market, you have the first link in my description down below, which brings you directly to Weeks. With my link and my link alone, you can earn a 20% deposit bonus for your trades. That means that if you deposit $10,000 into your Weeks futures account, you get $2,000 back for free for trading. And all you really need is an email and a password to sign up. It's the first link in my description down below. And I know I've talked about it at length before, but just to remind you, if we reject within this zone, it is likely that we go go ahead and retest 93.7K or even the yearly open right around 93.3K, that small region. And then if we can't hold that level of support, 91.8K becomes the next most obvious level of support. In terms of altcoins, as I've been saying on the channel, I would not go anywhere near altcoins because with this trade war stuff going on, positive or negative, altcoins still continue to bleed against Bitcoin. And what we can see here is that Bitcoin dominance just put in a new high, once again, above 65%, targeting the next region, which is right around this 66% level. And as I've been saying, if we get above 66% and hold that as support, there is really nothing stopping it from potentially making it all the way to 70%. Now that would be massive. Speaking of massive, I do want to talk about the USDT dominance chart because every time that we hold on to this trend line, we tend to get a major top for Bitcoin. We can see that in March of 2024, when we bounced off this key trend line, it was the 74K top. Then we got that bounce, and off that bounce all the way up to this wick, we got the correction where Bitcoin went all the way down to $49,000. Then we got the January 2025 top, which was right around Inauguration Day, where Bitcoin hit $109,000. We actually broke this trend line, which was extremely bullish, but we held as support right around 4%, and arguably horizontal trend lines are much more important than these diagonals. Then we got that pump, and this was the most recent correction all the way down to $74,500. Now we are making our way back towards this trend line. If this trend line breaks, it would be very positive for Bitcoin and the rest of the crypto market because we would likely see Bitcoin go ahead and try to make a new high. But if this area starts holding as support, it would ultimately be bearish, and then we would probably break up here, targeting a new low for Bitcoin. But you know my targets in the short term. I've been very transparent about how I'm navigating this market. If you want to trade the market, as I said, you have the first link in my description down below. Tons of bonuses, and I would highly recommend that exchange. Now, what is some of the news that's coming out ahead of FOMC? First of all, we have this war between India and Pakistan. India says that it has carried out military strikes against Pakistan, and Pakistan says it will be retaliating. We are on the brink of a war between two global nuclear powers. But it's still interesting to see that Bitcoin got a pump at these levels. Now, the next thing here is that since the US-China trade talks have been scheduled, this tells you all you really need to know about how the stock market is performing. Yes, we got a little bit of a pump yesterday, but could this mean that everything is already priced in? What if we start getting a bunch of trade deals and all of the upside is priced in, but the downside is not? Just something for you to consider, because perhaps the saying, sell in May and go away, will still hold to be true. Only time will tell. Then we also have the fact that institutional investors are still reducing their stock exposure. Funding spreads fell 8 basis points over the last week to their lowest since August 2024. This metric measures institutional demand for long stock exposure through futures, options, and swaps. Funding spreads have declined around 60 basis points since December. And to remind you, a similar thing happened right before the 2022 bear market. Institutional investors remain pessimistic despite the recent market rebound. And we know that a lot of retail have been buying stocks on this dip, more than we've ever seen before. Then, if we take a look at the stock market, we're still right below that key level that we've been talking about. Now, for me to be very bullish here, we are just inches away. Perhaps we get that pump back up to the 200-day moving average, which is this blue line on the chart. If we get above here and hold it as support, it would of course be very positive for the crypto market as well. Now, the next thing that we should be looking at here is also the leading indicators that are suggesting that inflation may be set to rebound, which is not what we want to hear, and which is also why ahead of FOMC today, we have the high likelihood that rates will stay exactly the same. There is now a 95.6% chance that this is indeed the case. If we do get surprise rate cuts though, be prepared because the market will likely rally very hard. Now, back to this one, the index prices paid by New York manufacturers jumped to 51 points in April, the highest since August 2022. At the same time, the Philadelphia manufacturing prices paid index rose to 51 points, the highest since July 2022. All while the Dallas and Kansas manufacturing prices surged to 48 points and 42 points respectively, which is the highest since June and September 2022. This data suggests that PCE inflation is likely to rebound over the next 6 months. This comes as more companies say they plan to pass cost increases onto consumers, according to the regional Fed surveys. So based on these numbers, there is a decent likelihood that we will see higher inflation ahead, which is not what you want to see for the market. And this brings up the topic of stagflation, which we've covered on the channel extensively before. Let's see what happens at FOMC, but I think that these rates staying the same are ultimately a given. We'll just have to see what Jerome Powell's tone is. Will he be dovish or will he be hawkish? And this will likely have a great impact on the market, as we discussed in my last two videos. Now, we also want to take a look at the Bitcoin spot ETFs, which we can see that yesterday we did get $85 million worth of outflows, which is seemingly insignificant because for the previous 3 days, we basically got $500 million in inflows on average. So this is not that concerning. What is concerning though now at this point ahead of FOMC is that we do have a lot of liquidity below the current price levels for Bitcoin. Guys, right now, I would say that this is a risky area to be trading Bitcoin because anything can happen. It's more than likely, in my opinion, that this key breakdown region continues to act as resistance, but it will also be chopping a lot of traders up. That's why over here, we recommended that we took some profits right around 93.7K if you were shorting that level, because it was pretty likely that we would get a rebound around that level and right around the yearly open. This is not an area where you want to be overly aggressive with your trades. It's much better to see what acts as resistance and what acts as support and then trade accordingly. Now, we do have the liquidations below the current levels, but on the bigger time frame, I was getting relatively optimistic for the Bitcoin exchange liquidation map. But right now, I'm coming to tell you that I'm not that optimistic because as we saw, more and more people were starting to short the market. But now, since we got a little bit of a Bitcoin pump, more people are starting to aggressively long. And we can see that the ratio is still pretty similar to how it's been over the past few weeks. Right now, we have a total of over $17 billion in cumulative long liquidation leverage versus a total of around $4.5 billion in cumulative short liquidation leverage, which means that most people at this point in time are still going long. And if you're trading this, it usually makes more sense to go against the herd. And so right now, this is why I'm not looking for any long positions unless we can hold that breakdown area that we previously discussed as support, targeting a potential new all-time high for Bitcoin. But until confirmed, I am still relatively worried because this is telling me that a lot of people are continuing to long Bitcoin right at resistance. And that sums up today's video. We have a pretty big day and even week ahead with all of Trump's announcements and FOMC coming in just a few hours. If you enjoy the content, make sure to smash that like button and subscribe. And if you want quicker updates, make sure you join my free Telegram group down below. I'll see you in tomorrow's video.